such as volume analysis. I'm just gonna make a deeper dive this today. I'm also gonna talk about certain things I've been, that I've been watching. I mean, certain events. So stay tuned for the video. So the topics of today. So the first thing I always do, I strongly recommend you to do every time. For example, in my case, I'm using MarketWatch or Yahoo Finance and Invested.com for alerts or stock alerts to track just to news related to the stock market. Feel free to use any tool that you feel is more that you're more comfortable with, but it's preferable to use as many tools as you can. But yeah. So the second thing, I'm going to talk about the events I've tracked those weeks. I'm going to make a deeper dive into the volume analysis, and I'm going to talk about some volume indicator you can use to improve your chances of getting profitable or at least breaking even for a trade. I'm going to talk about the contracts I've bought, I've sold, and I'm going to present to you my portfolio value now and what's up next week. So I'm gonna make a deeper talk about deeper details on using math and the average down strategy. So the events I've added to my calendar those weeks. So the CPI release data, which happened on June 13 this week, and the Fed's meeting happened on Wednesday, which is the day after, and the weekly jobless claim data. So all those three events, I want you to pay attention mainly to the Fed's meeting, because they are going to talk about the interest rate raise, which will have a direct effect on the market in a way that, because if, for example, right, the interest rate goes up, right, that means that the average American will have to pay more money to borrow money, to credit cards. So which directly implies, you will not be able to buy as much. Therefore, that's a direct measure to fight the inflation, because if you don't buy more products, the pressure that you're putting on the product, that you buy on the market will go down. So which means the price eventually will go down. So that's the idea behind it, to fight inflation. So that's really important, because if people don't buy enough, the fuel for any economy is people going out there and buying stuff. If people don't buy anything, then the economy is pretty much slowing down. So that's why that's one of the reasons why it is important. So this is my calendar for June of this year. As it's important for you to have a calendar, so feel free to use whatever calendar you have, but make sure that you have one to track, to make sure that you're tracking the news. So I've added some of the important, or the events that I feel was important based on the current state of the stock market. So the weekly job claim data, the CPI of May 2023 release. So the CPI is simply the consumer price index. So it's I've talked about that in one of my previous video, but just as a reminder, it's simply the consumer price index. So it's basically how much it will cost for the average American household to buy certain price of goods that is predetermined. So the Fed's meeting, as I talked earlier, and again the weekly job claim, weekly jobless claim, more precisely. So some of the volume analysis. So some of the most popular indicator, in my opinion, first is the Heatmap indicator and the volume fight, which basically has three main components: the bullish, the bearish, and the flat zone. So I'm just going to talk about, for this video, of the Heatmap. Is the one that I'm using and I prefer to use for a couple of reasons. So the Heatmap on TradingView. So in the previous video, I introduced you to TradingView and that platform. Feel free to let me know if you want me to develop more about how to use it and how I'm using it more precisely to accomplish the trade I'm doing. So just post a comment below in the description in the video. So I want you to pay attention to the arrow. So that I'm pointing, you will see, pay attention to this, and you see you see like a little graph below just that arrow. That's basically the volume the volume and the heat map that I was talking about earlier. So it just show you like green bar for buying and red bar for bullish or selling, So typically what is important, I want you, because in a regular day you see that it's almost like if in a regular trend, so if for example, right, if there's no like extremely bullish or extremely bearish trend, right, so it's gonna almost do both green and red, so bullish and bearish, or buy and sell, will almost stay even. So which means the trend, there's no strong upward or there's no strong downward trend. And what we are looking for is to have convincing or confirmation volume. So how do we start spotting those? So I want you to pay attention to the file, right? You will see a big red, a big green bar. So that's a huge compare. If you compare that to size of the bar, it means the higher the bar, the bigger the volume. So you see, compare that green bar to the red bar before, or just the red or every other bars during that day. You will see that it's distinguish itself by its size. So that's something to pay attention to. So typically what I'm looking for, I'm trying to I'm looking for, it's like you must see like two or at least, I will say between three and four like this. So 3 and 4, like 3 or 4 bar like this makes possibly a huge incoming buying order flow. So also something I want you to pay attention, that also means the bigger the higher the bar and the more of it you see it, the more the potential, the longer the potential trend will stay. So it's also important to have that in mind. So the heat map on Robinhood looks pretty much similar, but you will see that right below, exactly as I'm pointing right now, pay attention to this. You will see that arrow is exactly at that position. You see exactly similar, but it's not as distinguishable on TradingView on that Robinhood, but it's pretty much the same principle. So just pay attention to bigger or higher bars, so that, and I will say between 3 or 4 bar, whether it's buying or selling, will indicate a potential downtrend or uptrend. So just pay attention to those. So what topic I want to talk about today is the options versus futures. So why I'm talking about this, because you may heard about the future market and the option market or the stock market. So sometimes you may see like as an indicator, especially opening in the morning, if you want to have like an overall overview of the stock market, because you want to buy some options, so you can pay attention to the future market happening during the night. So let's just define what is an option and what is what are futures. Options, you pretty much know the definition. It's simply the right to buy, but not the obligation. It's pretty much, it is the right but not the obligation to buy or sell or contracts on or before an expiration date. As simple as that. So futures simply is like an options. It's like options that you can only sell or exercise at a predetermined date, right? So it's only typically the options at the expiration date that you can buy. You can do whatever you want or not before the expiration date. But the difference between those two, one of the main differences is that the futures, you can only sell or exercise those at that date. Whatever date that expiration date represent, it's only at that date. Whatever happened before, it doesn't matter. You can only act on that date. That's it. So some differences. So the stock market typically opens at 9:30 to 9:30 to 4 p.m. Eastern time for the New York Stock Exchange, or NYSE, sorry. And the future market opens from 5 p.m. to 4 p.m. Eastern time from Sunday to Friday, or 6 days a week. So the future market pretty much open days and nights, 6 days a week, so you can see the trend for whatever, for the SPY or whatever future you're looking at. You can see that, and where you can trade future for those that are interested into that. So you can trade future, for example, on TD American Trade futures, on Charles Schwab futures. Those are just some of the popular platforms I just found for you, but there are many others. Feel free, if you're interested in the futures, just post a comment. I'm gonna do the research for you. I'm gonna provide you the information that you want. So as I said, it's a huge week, and some of the previous trade I've made this week, I made four transactions this week, and the total profit you see in this page is on this part one is about $1,814 about that. So this is broken down into 3 transactions. The first one is about the contracts on June 12th. The total return, yes, a circle in red those trades for you, so you see that it's about 900. So it's for the contracts in the middle, or the trades in the middle, you see that about the very next day, and the total profit was about 400, and the next trade about pretty much day after day. So it's the following day about some couple of contracts, and the total return that day was about $547.5. So again, this week is a huge week because there was a strong uptrend, and there's a couple of rules that I'm following. I may talk about those. I'm gonna talk about those rules in the next video next week, but for now I'm just showing you what you could do with some strong work and research you put up front to make sure that you're not you're not making some not intelligent decision, if that makes sense. So, and final trade I make this week, you can see that I bought on June 15, and the total profit was about $337. So that will brings up the total profit for that week about $2,151.5. This is just the profit I'm showing you. They might have 1 or 2 more trades I did. I have to check my account activities to show that to you guys. But for the next page, I'm gonna show you what is approximately the value of my portfolio, but it has increased more. But I'm gonna show you next week, not right now, but just because this is the video for the 7 and 8 week. This is pretty much, I will just show you what happened for the 8 week, and I will show you what happened for the 7 week. But what I'm gonna show you is just the profit like in between. So I take the screenshot in between the 7 and the 8 at the beginning of the 8 week, and this is what you will see. So it's about $8,734 US. And you can even see that day I was already, at the moment I was taking this particular screenshot, I was already up about $257 US. So that's probably one of the contracts that I was buying into. So it was a crazy week. So quick recap for the day. It's extremely important. I cannot emphasize that enough. You must keep track of the news, because you cannot just jump into the market and trade blindly, because you have to know or have an idea about the potential trend, whether it's an uptrend or a downtrend, that will predetermine what type of trade you want to go for. It's extremely important. So second thing I want you to remember is prefer quality trade over quantity. So it's important to trade not too much, but trade when to right at the right time, and and use risk management to leverage the risk in case you are getting I don't know, things are getting don't turn the way that you're expecting. You can still use averaging down. And next week I'm gonna talk about a little bit of the math behind it, and how you can technically how you can use it to basically push your whatever price you bought. If you bought those contracts for, you can push it down in a considerably by following certain rules I'm following. Those rules are not universal, but those are my rules. So third, I want you to stay calm even you're under pressure. So it might happen sometimes that you buy a couple of contracts, right? And sometimes you see that your price of your portfolio is negative, right? But it's really important to have your emotion under control and use the strategies that you have, such as averaging down, stop loss, pay attention to the overall trend of the market, and stick to your emotion. Just have emotion under control, and use also some overbuy and oversold. So overbought and oversold signal compared to, combined with a couple of other tools or indicators to make wiser decision. That's extremely important. So learn more about some buying signals and general rules to avoid taking big losses. So this is what's gonna happen next week. Thank you so much for you guys to watching it. And yeah, so this is what I've been doing this week. A lot of progress. I started this journey with $2,000, and now I'm pretty much at over 3 months, maybe 3 months and a half. I'm almost like 300, almost 400% already. So yeah, so stay tuned for this journey, and you will see the result of the journey with me. So stay tuned, and yes, see you next week. Peace. Subscribe, leave a comment on what you want me to post, and thank you for watching.